This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks extending a two-year high ahead of the U.S. CPI print, even as Fed Chair Jay Powell repeats the higher for longer mantra. Bloomberg learns the U.S. is considering sending another Patriot air defense battery to Ukraine as Secretary of State Antony Blinken visits Kyiv and says the country is not alone. Plus, a Bloomberg scoop. China considers having local governments buy millions of unsold homes to salvage the debt-ridden property market. Well, it's just gone 8 a.m. across the Emirates, 7 a.m. here in Qatar. I'm Joumanna Bercetche in Doha still for the Qatar Economic Forum. It is day 2 of the forum, hosting more than 8,000 business and government leaders for discussions on the issues now dominating the global agenda. Some key speakers to watch out for today include the Turkish Finance Minister Mehmet Şimşek, Amanda Stavely, co-owner of football club Newcastle United, and the CEO of Qatar Airways. I also will be moderating panels throughout the day discussing foreign investments using innovative real estate and infrastructure ideas to reimagine our cities, plus the future of tourism. Lots more as well on the geopolitical horizon. Our editor-in-chief, John Micklethwaite, will be sitting down with KKR's General Petraeus, so that is something to watch out for as well. But let's turn to markets now. A quick look at how these key indicators are faring. We had that surprisingly hot PPI print yesterday. That was a bit of a signaling to the market ahead of today's all-important CPI print. Again, expectations are high, but lots of signals suggesting the last couple of days that it may also surprise to the upside. You can see MSCI Asia Pacific leaning towards the green today, up 0.6%. S&P futures inching higher as well, about 0.1%. Two-year yields in focus now trading around flat, 4.82%. But we did see the two-year move about 3 basis points higher throughout the course of the session yesterday after that PPI print came through. And then Brent keeping an eye, sitting below $83. Some talk about potential change of quotas at the upcoming OPEC Plus meeting. So that is something to watch out for. Let's take a look at today's terminal chart. I mentioned it is a big day for investors. CPI is on the agenda. Well, take a look at the breakdown here. What has been surprising? It is the services print you want to be watching out for. Core goods has been in that deflationary trend, down minus 0.2%, but core services still higher than that 2% mark, 3.2%. So if there is an upside surprise today, it will be coming from the services components. So let's keep an eye out for that throughout the course of the U.S. session. But for now, let's check in on how markets in Asia are faring. David Inglis is in Hong Kong. David, it's great to have you on our show. Tell us about what the markets are doing in your space.
Yeah, happy to be here. And certainly what a day going into a fairly important milestone of the week with U.S. inflation coming through. And just to add to what you just mentioned there, core U.S. PPI actually blasted through the highest estimates. And amidst that, it does seem, of course, investors are taking that in stride. You mentioned what we're doing here in the Asia Pacific, so you have to go back to April of 2022 to see this benchmark at these levels, flirting with 180 level. We have a lot of markets. Well, we have 2 markets shut today, fairly big ones, I should note, Korea and also Hong Kong. And because of that, you're actually getting volumes collapsing about 80%, give or take, compared to the 30 average. On price, though, so you're getting a big tech swing to the upside. TAIEX index are also getting a lot of the material plays. In Australia pushing through as well. So these 2 markets are up. We're just watching on the 10-year yield on the back of the CPI print that's coming out of the U.S. We might just actually find ourselves on the other side of that at a new 2012 high. Watch it very closely. Miners, bottom of your screen's coming up as well, if not already. That takes us into the breaking news and the big news coming out of the Asia Pacific earlier on as it pertains to China. And you're going to look at some of the reaction coming through here. We are, of course, on the lunch break on the Chinese mainland. All that being said, 5% up on the benchmark on the CSI 300. Some strength coming through in the Chinese currency, and some of the other non-China proxies like the Aussie dollar also feeling the tailwinds of that report. And in case you missed that, of course, I'll just summarize it very, very quickly, that China is said to be mulling letting local governments come in and buy some of the unused inventory to perhaps get that story going. Anyway, good market story for now. I'll send it back to you, Joumanna.
Yeah, huge story. We actually are going to be talking more about that later on our show, but thank you for bringing to us the reaction in some of those real estate stocks. It is quite significant this morning. David Inglis. Geopolitical tensions and armed military conflicts are dominating discussions at this year's Qatar Economic Forum. Qatar has been mediating ceasefire talks between Israel and Hamas and says negotiations have reached an impasse.
It's been actually a very long process, and especially in the past few weeks, we have seen some momentum building, but unfortunately, things didn't move in the right direction. And right now, we are in a status of almost a stalemate. Of course, what happened with Rafah has set us backward a little bit. Probably there is no clarity how to stop the war from the Israeli side. I don't think that they are considering this as an option.
Well, joining us for more is Bloomberg senior editor Bobby Ghosh. Wonderful to have you with us on the show. I was speaking about this yesterday with Stuart Wallace, and this was my first Qatar Economic Forum, and I've got to think that this year geopolitics have really been front and center. Yesterday, a lot of the discussions that took place were very much focused on geopolitics and also Qatar's role, because we know that Qatar have been playing a mediation role in energizing and putting forward these Israel-Hamas truce discussions. And yet the messaging from the PM yesterday, I've got to say, seemed pretty pessimistic about the future of those talks.
Yeah, he came across as a man who seemed almost at the end of his tether here. Yes, you're right. The geopolitical discussions, particularly, the theme of this year's QEF is navigating a year of uncertainty. So I suppose it's appropriate that the first day the discussions were about war, hot wars, Gaza, Russia's invasion of Ukraine, and the Cold War between the United States and China. The morning session was the Qatari Prime Minister and the Prime Minister of Malaysia, Anwar Ibrahim, both of them making very impassioned pleas for a ceasefire, but also, I think, acknowledging that we're not anywhere near there yet. And this Israeli invasion of Rafah, which is continuing, has, as the Qatari Prime Minister said, put things back. We also heard from President Duda of Poland, who made, again, a very strong case saying that the world must not allow Russia to win in Ukraine. And he's obviously very anxious himself. He pointed out that if Russia were allowed to win in Ukraine, it wouldn't end there, that other countries in Europe, NATO countries, including his own country, Poland, would then face, he felt, aggression from Russia. So that was really quite an opening session.
Yeah, it really was.
And then at the end of the day, we had Ken Griffin of Citadel talking about the Cold War. And his view was that the U.S., the Biden administration, was not really working towards peace in the Cold War, if you like. He was quite critical of the decision to increase tariffs on EVs.
Yeah. I mean, a lot to digest, and some of it, as you say, is in reflection, direct reflection of the latest news that we're getting in that space. Interesting as well that Secretary of State Blinken made a visit to Kyiv yesterday to reassure the Ukrainians that the U.S. is on board, that $61 billion of aid that was agreed in the package a couple of weeks ago is going to arrive, even though it's going to take some time. But again, from your standpoint, and I know, you have a perception and analysis of the world geopolitics right now, I walk away from those sessions feeling slightly worried about the state of these both hot wars and cold wars.
There was a lot of anxiety on display, particularly from President Duda, because, of course, the Blinken trip to Kyiv comes against a backdrop of reports of Russia making actual advances into Ukrainian territory. There were concerns that the aid package that the U.S. finally agreed upon, that took too long and that the aid might not reach the Ukrainians in time. Duda pushed back against that a little bit. He said that, yes, the ammunition and the arms that the Ukrainians need will reach them in time for the expected spring offensive from the Russians. But there was a lot of anxiety, and not just on the stage, but in the room, as I was talking to business leaders from around the world who are here. They're trying to factor in these things into their plans. So when we hear from General Petraeus today, he's a former military commander, former director of the CIA, he'll be talking about security risks worldwide. And I think the audience sort of coming off that anxiety of yesterday, will be listening very closely to see if there's any reason for optimism in the months ahead.
Well, you know, in my conversations with some of the local finance ministers, I had a conversation with the Saudi finance minister a couple of weeks ago in Riyadh. Yesterday, also Qatari finance minister. They all say the number one risk right now is actually geopolitics and security risk. You've got to think in the region. That's not a surprise. I just want to pick up also on Ken Griffin, because you mentioned that last conversation that he had yesterday, a really fascinating insight. But one thing that stood out to me is he has more of a, I don't want to say sympathetic, but perhaps he's a more realist approach in how the U.S. should be handling China. And that really stood out to me as a business leader from the U.S., given the state of politics in the U.S. right now, because both sides of the aisle are pretty hawkish when it comes to the relationship with China.
You're right. He does sort of plow his own furrow on China. And not a lot of people in the U.S., certainly not a lot of people in Washington, take the same view as he does.
Yeah.
But he has been pointing out that some of the Biden administration's policies are self-contradictory. So he says, look, Biden, on the one hand, Biden says he has these green policies. He wants to reduce carbon emissions. On the other hand, he's making it harder for Americans to buy cheap EVs from China, and that these two things don't really fit each other. He's not a big fan of Biden. He on stage talked about Donald Trump. I think it was fairly clear that his favored outcome in the elections in November will be if Trump were to win the presidency. But it's not just an ideological position he's taking. He's talking about economics, and he's talking about the need to cool, or let's say warm up the temperatures in the Cold War.
Yeah, well, he did say that as well.
Yeah.
And then he also spoke about deregulation as well. His sense was that this administration has gone a little bit too hard on the regulation aspect. Bobby, well, there's plenty more to discuss. Thank you for joining us on the show today, and hopefully
Anytime.
that is a good scene setter of what's to come on day 2 of this Qatar Economic Forum. Well, as Bobby was just saying, Citadel's Ken Griffin is criticizing President Biden's economic policies while saying that neither Biden nor Republican frontrunner Donald Trump are likely to reduce U.S. federal spending, a big story in the U.S., of course. We spoke to Griffin here at the Qatar Economic Forum and asked for his view on the Biden administration's move to hike tariffs on Chinese imports.
Well, it's sort of a continuation of the incoherent economic policies of the Biden administration. We've seen this giant push towards green energy over the course of the last several years, and at the same time, a set of policies that run completely contrary to the stated goal of trying to head towards a zero-carbon world, and placing enormous tariffs on Chinese EVs, which are low-cost, high-quality, of great value to American consumers, is yet another part of the incoherent Biden economic strategy. The other part of the strategy that I scratched my head about is the U.S. refusing to provide new LNG permits. Right? If you want the world to head towards a lower carbon footprint and move away from coal, access to LNG is a really important part of the equation. And yet the United States is refusing to permit new facilities in the foreseeable future.
And also to sell LNG to countries with which the United States doesn't have a free trade agreement.
That's a part of the equation also.
You've been a prominent donor, I would say, to Republican candidates. I'd like to know, how are you going to spend your money? How are you already spending your money ahead of the election in November?
So I have been a significant supporter of Republicans that stand for personal freedom, national security, and economic soundness in the United States. That has been a big focus of mine in this primary election, or this primary cycle. I want to see people in the House and in the Senate that represent the best of American values and backgrounds that prepare one to serve in public service. In the last election cycle, I supported a number of people who were veterans and who are now serving our country in the House, and they do it with the pride that our country deserves, and they do it with the integrity that our country needs. So I've been very focused on finding candidates who I think represent the best of American values to be part of the future of the Republican Party.
People probably want to know, have you donated to Donald Trump's campaign, either directly or indirectly, to a PAC or a super PAC?
I have not.
Will you?
I'm going to wait to see who he picks as his VP candidate.
Is there anyone whom you'd like to see him pick as his VP candidate?
I don't, this is again like poking the bear. Not sure which way my recommendation goes in terms of helping that person's prospects.
We must not allow that Russia wins in Ukraine. Once again, let me repeat. The free world must not, I believe, allow Russia to win the war in Ukraine.
That was the Polish president speaking at the Qatar Economic Forum. U.S. Secretary of State Antony Blinken is reassuring Ukraine of Washington's support as Russia continues a large-scale offensive in Kharkiv. Blinken has met with Ukrainian President Volodymyr Zelensky in Kyiv.
I have come to Ukraine with a message. You are not alone. The United States has been by your side from day one. We are with you today, and we will stay by your side until Ukraine's security, its sovereignty, its ability to choose its own path is guaranteed.
Well, Bloomberg's Piotr Skolimowski joins us for more. How significant is this Blinken trip to Kyiv?
It's the first trip by the senior U.S. official since Congress approved this military package of aid of $61 billion. And obviously it's coming at the moment when Ukraine is really under pressure. Russia has, on Friday, they launched a new offensive, which went over the border into the northeast of the country, very close to Ukraine's second largest city of Kharkiv. And obviously Ukraine is under pressure because of that, and Russia is trying to push the country and sort of spread their forces more thinly around the front line.
What is the current state right now on the front? Because you hear, the President Duda is talking about the need for ammunition, Ukraine continually emphasizing that point, but what is actually happening on the ground?
Well, obviously they are definitely outmanned and outgunned. They don't have enough ammunition to continue fighting properly and kind of forcing the Russians out. The key thing is obviously the air cover. They don't really have air defenses, and something that Zelensky actually raised with Blinken yesterday was we need 2 Patriot batteries for Kharkiv itself, and obviously they also need cover for infrastructure, because infrastructure has been bombed significantly, and at this point they are actually that leads to power cuts, for example. So obviously that's something that they need, and apparently that's what the U.S. is also planning. They're planning to send another Patriot battery to Ukraine.
And of course the concern, I guess, as far as the rest of the world is concerned, is that they would be inclined to go to the negotiating table from a weaker standpoint if the pressure from Russia persists.
Indeed, and obviously there is a plan now to have a meeting in Switzerland to talk about what's called a peace plan. Obviously at this point it's very hard to say who's going to show up there. For example, President Duda, Polish president, already declared he's going to come. At this point, the push there is from Ukraine's Western allies is to encourage China to join that meeting. But obviously Russia is not going to be there, so that's another step. And without Russia, nothing is going to change here.
Well, Piotr, thank you for the update from what has been happening in Ukraine. Bloomberg's Piotr Skolimowski. The Kremlin says Russian President Vladimir Putin will discuss issues of strategic cooperation with China's Xi Jinping during a 2-day visit beginning Thursday. It is Putin's first foreign trip since his re-election. He'll also meet with the Premier Li Qiang for trade and economic talks. The U.S. has threatened further sanctions on China, which it accuses of providing support for Russia's war effort in Ukraine. Coming up, sweeping China tariffs, we get the details on what duties the U.S. has imposed next. This is Bloomberg.
I want fair competition with China, not conflict. When you make tactics like these, you're not competing. It's not competition, it's cheating. And we've seen damage here in America.
We are interested to see how China responds. We have indicated to China that this is not an intention to escalate or even to confront. It really is on our side a set of defensive measures when taken together with the investments that we are making here in green and clean technology.
President Biden has unveiled sweeping tariff hikes on a range of Chinese imports, accusing Beijing of cheating. Beijing has blasted the move, vowing to take its own action. Our chief North Asia correspondent, Stephen Engel, joins us now for more. Well, we've been monitoring this story throughout the course of the last couple of days. We knew that perhaps a response was coming. What stood out to you?
Well, yes, you're absolutely right. Bloomberg News had this scoop late last week, so we knew this was likely coming, and now it has been unveiled by the White House. And absolutely what we reported last week, it's tariffs of about 100% on electric vehicles, 50% on lithium-ion batteries that go into EVs, but not into solar. That's an interesting development because there are some moves afoot by the U.S. Trade Representative's Office to also protect the nascent and building growing domestic solar industry in the United States. So they have had some exclusions, perhaps, in the solar space, but in batteries for EVs, in chips, and some other areas, including ship-to-shore cranes, which has national security implications. Also some other items, targeted items, surgical masks, syringes, needles, a number of different items that are going to be targeted in this round, if you will, of tariffs on China. China has fired back. They said China will take resolute measures to safeguard its own rights and interests, and they are calling on the White House to correct its wrong actions, cancel the additional measures against China, and call this as well a political manipulation by the U.S.
And Stephen, other really big story overnight, China considering the sale of unsold homes to local governments. What's the latest on that story? Because it's moving markets.
Yeah, this is potentially a big story because the Beijing authorities have tried a lot of different things to prop up the property market at a time when the economy is slowing and property is one of the biggest drags. So what we're hearing from sources is that essentially China is considering this proposal to have local governments across the country buy millions of unsold homes. They would elicit the support from state-owned enterprises and the state banks to basically help purchase unsold homes from distressed developers at steep discounts using loans provided by state banks. We're still fleshing this story out, but this would be a significant new phase in Beijing's efforts to prop up the property market. But at a time when, so far, Beijing has been reluctant to throw a lot of fiscal support towards the property market. No bailouts, really, but they do want to protect the rights of homeowners, so they would potentially buy these from distressed sellers and then turn those units, millions potentially, into affordable housing.
Right. Very clear. Our chief North Asia correspondent, Stephen Engel. Also coming up, UAE-based boutique advisory firm deNovo Partners is planning on expanding into Saudi. We speak to the CEO coming up next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks extending a 2-year high ahead of the U.S. CPI print, even as Fed Chair Jay Powell repeats the higher for longer mantra. Bloomberg understands the U.S. is considering sending another Patriot air defense battery to Ukraine. That, as Secretary of State Antony Blinken says the country is not alone while in Kyiv. Plus, a Bloomberg scoop. China considers having local governments buy millions of unsold homes to salvage the debt-ridden property market. Well, it's just gone 8:30 a.m. across the Emirates, 7:30 a.m. here in Qatar. I'm Joumanna Bercetche in Doha. It is day 2 of the Qatar Economic Forum, hosting more than 1,000 business and government leaders for discussions on the issues now dominating the global agenda. I'll be moderating panels throughout the day, discussing foreign investments using innovative real estate and infrastructure ideas to reimagine our cities plus the future of tourism, always a big focus for this part of the world. Quick check on markets as well. We were leaned into this show talking about some of the headlines coming from Jay Powell yesterday, suggesting that the higher for longer mantra is back. That sent two-year yields a couple of basis points higher in the session. You've got two-year sitting at 4.82. Asia Pacific having a good run today, coming off a two-year high yesterday, so up 0.5% this morning. S&P futures leaning sideways, and then Brent in focus up 0.6%. One chart we're watching into going into that CPI figure today is taking a look at that core CPI figure and the fact that services inflation continues to run quite hot in the U.S. It has been moderating, but stabilizing as well at these levels at around 3% the last couple of months. So that's going to be a big focus for investors as we get that CPI print later today. Not so much the case for core goods, where you can see that we're actually in deflation territory, down minus 0.2%. So this is going to be a big driver for investors later on. But let's check in on how markets in Asia are faring. David Inglis is in Hong Kong, and a big story emerging out of China this morning, David.
Yeah, giving us something else to talk about besides U.S. inflation, although I imagine the inflation print this time tomorrow will be the bigger driver. And certainly, to your point earlier on, investors are leaning into risk and, I guess, hope that we won't get too much of a disruptive number when that comes out. We're just looking at a 10-year yield as well. And change the page while I talk about this. 1 basis point now from topping that high last year takes us all the way back to 2012. We talked about this boost in the property sector, 5%, and some of the proxies here getting initially a fairly constructive reaction to that breaking news report. You can read all about that, by the way, on your Bloomberg terminals and also on the website. Very quickly, we are in the thick of earnings season in Japan. Hundreds of companies are coming out with earnings this week. Sony was out yesterday, a beat there, a stock buyback as well, plus a stock split. Sharp is the opposite, a sort of reaction as well, sort of opposite narrative, I should also note as well. Topics Banks Index up several days as well. That goes into the big Japanese financials. I'll leave you with this, coming out with earnings today, these next few hours. Keep your eye on these amidst this rising yield environment over in Japan. Back to you.
Yep, as ever, David Inglis, thank you so much. That was David Inglis in Hong Kong. Now, let's turn back to the Middle East and Saudi Arabia's Vision 2030. It was in the spotlight at my panel yesterday. We also discussed the challenges facing economies in this region.
If you don't allow your economy to catch up with your projects, basically what will happen is you will import a lot more, and you will not allow your economy, your private sector to catch up and build their factories, manufacturing facilities, service providers to actually support the projects that you are building. So giving it more time is actually wise.
The high interest rate environment, is really a big challenge, and the high dollars. So, but this is definitely a challenge for the region as a whole, not, as I say, specifically for Qatar, but could be also for the private businesses a challenge.
We are moving. I think our leaderships see eye to eye on the most important issues. That's very important because it's all about signaling also. Mm-hmm. It's not the money you have. It's what signaling are you giving the market, to the domestic investor, to the external investor.
Some of the highlights from my panel yesterday with GCC finance ministers. Well, speaking of investing in Saudi, UAE-based boutique advisory firm deNovo Partners is planning on expanding into Saudi. Our next guest believes the kingdom will bridge the gap between itself and other financial centers like Abu Dhabi and Dubai. Let's bring in May Nasrallah, the founder and executive chairwoman of deNovo Partners. May, it's wonderful to have you here with us on the show.
Thank you.
Maybe let's just talk about some of the opportunities investing in the region is offering right now. And of course, your firm does advisory work for many companies looking to take advantage of some of the deal making going on. Just give us a sense for what activity is like right now.
Pleasure to be here with you. Thank you for having me, Joumanna. I have to say, in my 18 years of being in the region, I've never seen this region be so energetic as I'm seeing it over the past few years. And a lot of it is underpinned by government strategy and focus on the domestic agenda, far more than they used to have when they were typically investing a lot of the excess capacity that came out of the oil production in international markets. Now there's a bit of a shift that has happened, particularly in Saudi, certainly in the UAE for the past number of years, where the focus is on what do we do domestically for us to encourage and diversify our economy. They have a huge growing population, very young population. Yeah. And clearly they're looking at the fact that the world beyond oil, where do they want to be? And they want to be in a much more diversified economy than they used to be.
Yeah.
So the sovereign wealth funds have gone into now investing more directly into assets internationally that can bring know-how back into the region. They've also encouraged their portfolio companies, the GREs, in doing a lot more direct investing. So we're seeing, if you want, more corporate-like investing happening, but that's underpinned predominantly by the sovereigns looking towards that consolidation agenda or that investment agenda, and really with the focus on their economies being far more diversified than they used to be. And it's actually really quite nice to see that happen, because ultimately the level of sophistication of these investments or this M&A activity has actually increased quite meaningfully.
Yeah.
We're seeing really interesting transactions, cross-border transactions, domestic consolidation transactions. So from our perspective, this is great. We're seeing a lot of activity as a result.
Yeah, well, you know, I wanted to ask about the pipeline. One of the conversations I had last week at Dubai FinTech Summit was with Adina Friedman, the CEO of NASDAQ, and she was saying how healthy the listing environment has been in Dubai. And I just wonder whether that momentum can continue, whether you see that continuing in 2024, 2025.
Oh, absolutely. Again, because it is underpinned by governments wanting to support it. So if you see the large IPOs that have happened, they've been government-owned entities that have been listed. So that has encouraged the private sector. So the recent example of Spinny's listing is a private sector listing that is now thinking, okay, there is liquidity in this market. I should be encouraged to list my company. But it had the government-owned entities, which are meaningful and sizable and attract international investors coming in. Had those not happened, I think people would have been far less discouraged. But if you look today at the pipeline, there's at least 80 to 100 companies that are in the pipeline that are looking to be listed, whether that's on the Tadawul or the ADF or DFM. We're seeing a lot of activity, and I think we'll continue to see that for a while to come.
How do you see the opportunity for a boutique advisory firm like yourself? Because you tend to hear about these mega listings and the mega banks getting involved.
Sure.
You know, the handful of U.S. investment banks or European investment banks advising those companies. How does it create opportunities for you?
There'll always be an opportunity for boutiques like us. We're looked at as independent, best in class, having a lot of experience and ability for us to give real good advice for these owners of companies, owners of organizations. And we're working on multi-billion-dollar transactions, sometimes alongside with the large banks, sometimes on our own. But there's always going to be a need for people to want to get advice for them, and without any view of any conflict of that advice. And so we're quite busy at this stage, and I think we expect to be quite busy for a while to come, given what's happening in the region.
How do you see the evolution of financial centers in the region? Because, you know, we talk about the opportunities in Saudi. I spoke about Dubai. Obviously, Abu Dhabi is attracting a lot of capital.
Sure.
We're here right now in Doha.
Sure.
Do you sense that there's a bit of competition going on between all of these cities?
You know, there's always going to be what they call healthy competition amongst them. And I think we tend to see part of that competition that we're saying, well, wouldn't it be better for everybody to collaborate? And the view has always been, well, we're stronger by competing, because it encourages us and it forces us to be better and to be different and to do more things that are opening the market and encouraging more people to come in. And so it's looked at as healthy companies, sort of like siblings that actually were sort of trying to do their own thing. But we haven't seen too much negativity that comes out of that. Collaboration is always good. I think from a sovereign level, they all collaborate a lot with one another. But certainly there is in their own capital markets, each one of them is trying to attract more people to list in there.
What do you think needs to happen? I mean, clearly, you know, many of these governments are doing the right things. And yesterday I was on a panel with His Excellency Jadaan, Saudi Finance Minister, and we spoke about FDI. And he said, our message to international investors is we want to create a good business climate so that international money comes in.
Sure.
What needs to be done, or what more needs to be done? Because they're doing some of the right things, but what other elements do we need to see?
I think you need to take a bit of a step back in terms of where Saudi is coming from. Saudi was not a very open environment for the longest time, and now they're very open, and they would like to encourage more FDIs coming in. But regulation needs to follow that, openness needs to follow us, clarity of rules and how one should navigate in that, bankruptcy laws, proceedings, etc. Examples of that need to happen. I think the lack of meaningful FDIs that the Saudi government was hoping for is only a matter of time. I don't think it's something that's going to be there forever, that they're not going to get as much FDIs as they would like. I think they are starting to open up much more to that.
Yeah.
But again, there's an issue of perception, there's an issue of practicality, there's an issue of actually rules and regulations being modified. They already changed 3,000 laws, apparently, that have helped to get to that level. But they're saying that there's another 2/3 laws that they need to change.
Yeah.
So there's a lot that's happening, and it's quite a tough environment for them to just do things overnight. People expect them to do things overnight, and I think it's going to take a little bit longer than that. But they're certainly heading in the right direction and doing a lot of the right
well,
things.
it does sound quite positive. You paint a positive picture for financial activity this year. May, thank you so much for joining me on Horizons. May Nasrallah, the founder and executive chairwoman of deNovo Partners. Thank you. Turkish Central Bank Governor Fatih Karahan says the Monetary Authority is committed to keeping a tight policy stance. He spoke to me yesterday on a panel discussing banking.
The underlying trend of monthly inflation has been coming down because of the tightening that we have done. Now, if you look at market expectations, the markets agree 100% that inflation is going to come down quite a lot. We disagree a little bit on where it's going to end. Our forecast and our target for year-end is 38%. But market expectations, being around 44%, and our policy rate being, 50% in simple terms, 64% in compound terms, is actually quite a tight stance.
Well, not just the central bank governor. I will be speaking to the Turkish finance minister, Mehmet Şimşek, today. Lots of people want to hear his views as part of a panel discussing how nations can think differently when attracting foreign investment. Also coming up on this show, diamonds are not forever. Anglo American says it plans to exit its De Beers business as it seeks to fight off a takeover approach from rival BHP. Details next. This is Horizons Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Doha. Anglo American is preparing to break itself up after rejecting BHP's latest takeover bid. But the battle between the world's two biggest miners continues. BHP CEO Mike Henry says investors must decide whether his team or the rival one at Anglo is best positioned to deliver value from their restructuring plans. Let's bring in William Coase, our mining and metals reporter. William, why is Anglo unveiling this plan? And just talk us through what it will entail, this restructuring program.
Yeah, good morning. Anglo American has been working on a root and branch review of its entire mining portfolio since last year. But BHP's takeover approaches have accelerated that process and made Anglo reveal its turnaround plan, its survival plan, depending on how you look at it, a bit quicker than it originally intended. So after already rejecting two approaches from BHP, Anglo shareholders were understandably keen to hear what the management of the company were planning to do to provide these investors with more value than simply just selling up to the larger rival. What was announced yesterday morning was a plan to really slim down the business and to focus on Anglo American's copper and iron ore mines. It's worth pointing out that it's these copper assets in Latin America, which is what explains why BHP wants to buy Anglo in the first place. But the consequence of this new focus is that Anglo is now proposing to get rid of its platinum, its diamonds and coal mines. And these are considerable assets in their own right, including the famous De Beers diamond brand and the world's largest producer of platinum.
Right. We've already seen several takeover attempts from BHP. I wonder if they're going to go for a third. What has been the BHP response to the plan?
So we're waiting to see if they come back with a third offer. But in the meantime, the BHP's company chief executive, Mike Henry, has understandably said he's disappointed that the two approaches have been rebuffed so far. And he says that ultimately it's going to come down to the Anglo shareholders to decide which company is offering the better deal for the company. and which leadership team will be best able to operate and optimize the Anglo assets. BHP has also said at the same time that Anglo's new restructuring announcement made yesterday, in fact, validates their initial proposal because it involves spinning off the platinum subsidiary, as I mentioned a bit earlier. BHP's proposal for Anglo.
All right, William, we're going to leave it there. Thank you so much for joining me this morning. William Close, our mining and metals reporter, thank you. Well, global business and government leaders are gearing up for day 2 of the Qatar Economic Forum. The conference also brings together influential voices from the Global South, continuing their call for African debt relief. Let's bring in Bloomberg's Jennifer Zabasajja and my co-anchor also.
Hi, Joumanna.
You've been having lots of conversations at the Qatar Economic Forum. I didn't get the chance to catch up with you properly yesterday, but I know today you're going to be leading a panel on the investment opportunities and the partnership that can be formed between the Middle East and key African nations.
Right, and Joumanna, I think it's really important to note that there is a lot of opportunity here, and that's what we've been really hearing over the past day or so here at the Qatar Economic Forum, that are the opportunities for collaboration. And so later today we're going to speak with the Qatar Airways CEO, but also the Rwanda Air CEO. Aviation is one of many sectors where we're seeing the Gulf and Africa really try to bridge the gap in terms of collaboration and opening up the continent to the rest of the world. Also, something that we don't always talk about is education. And really, we have a panel later today about, again, bridging the gap between finance ministries and education ministries to open up the opportunities for education, which then in turn leads to more development, more jobs, and benefits the African continent and more broadly the globe. And so it really seems like the Gulf is trying to be a key player in the development of Africa, and we'll hear from more African leaders about how they feel about that.
Yeah, one of the things that struck me from our conversation yesterday with the UNDP Africa Regional Director is resource mobilization. And she says that African nations need to be doing a lot more in terms of optimizing the resources that they have as a means of, again, optimizing their own public finances. But then again, the other theme, of course, is that many of these countries are also saddled with a lot of debt that needs to be reduced as well. So from a financing perspective, what are the discussions that are taking place here?
Right, and I think it's important, too, to note there's also climate change, right? And we talk about climate finance a lot of times when we're talking about financing for these African nations. And so, the conversations, and we were talking to Ahuna Ezeakonwa about this particularly, a lot of these nations are dealing with not just debt distress, they're also dealing with climate-related weather events. Yesterday, we heard from the Kenyan finance minister. Kenya, of course, has been dealing with damaging and deadly floods. And so the question is, where does this mobilization need to come from? And I spoke to Ahuna again later in the afternoon, and she was saying there does need to be more collaboration, more partnerships. But here's just what she told part of our conversation yesterday.
We don't think that it's possible to achieve the 2030 agenda of sustainable development goals in Africa without a rethink about the financial flows for development. And we know that there is currently a gridlock. African countries are not getting the resources and the support that they need.
And just following on that, Joumanna, Ahuna was telling me a lot of, as you know, of course, a lot of resources right now are going to wars and to a lot of the other crises that the world is dealing with. And so when we talk about a world remade, which is the theme of this year's conference, and Africa remade, she is saying that there really needs to be some thought into it, a mobilization of different partners and players, just given the mounting crises that these countries are facing.
I think the theme is navigating uncertainty, and I think so much of the conversation has been dominated by geopolitics, by the hot war, the cold war. Bobby was talking about that earlier on, but we need to remember as well that there as a huge chunk of the global population who feel like they are not benefiting from all of the advances that the developed world has seen, and this is an opportunity to change that paradigm, to change the financial system.
She said trillions of dollars are going to the war instead of development and aid, and so that's just putting into context everything that is happening, that uncertainty that you're talking about.
Yeah, fantastic. Well, I'm sure you and I are going to be talking a lot more about that in our coming months. Jennifer Zabasajja, also co-anchor of Bloomberg Horizons, Middle East and Africa. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Doha. Now for a look at some other stories that we've been following this morning. OpenAI's chief scientist Ilya Sutskever is leaving the company, saying he plans to work on an undisclosed project. He's one of several board members who moved last November to fire the CEO Sam Altman. In a post on X, Sutskever says OpenAI's trajectory has been, in his words, nothing short of miraculous. Altman, in a separate post, describes Sutskever as one of the greatest minds of our generation. And Boeing says it delivered just 24 commercial jets in April, the lowest monthly tally since February 2022. That included 16 737 MAX narrow-body jets and 4 Dreamliners. The plane maker has slowed production of some aircraft to focus on improving quality. It's been under intense scrutiny after an airborne 737 MAX jet suffered a structural failure in January. Well, we are on day 2 of the Qatar Economic Forum here. There are plenty of discussions that are going to happen throughout the course of the day. I myself will be sitting down with the Turkish Finance Minister Mehmet Şimşek in a couple of hours, so do not miss that interview. And plenty more, as you can see on the screen in front of you, ranging from our conversation with the CEO of Accor, Sébastien Bazin, in about 10 minutes' time. Patrick Pouyanné is going to be on stage with Francine, and then you can see plenty of the other discussions also taking place. Qatar Airways CEO also will be speaking. So stay with us. This is Horizons Middle East and Africa. Daybreak Europe is coming next. This is Bloomberg.